Good afternoon, back with you with today's recap, September 29th, 2020. Hope you're all doing well. What a interesting day in the markets again. Quick trade for us today, this morning on HUSA. 5-minute trade in at 347, out in the 440s. We were trading on a easy 1,500 shares. Not too much, not a big position size. A lot of you asked me about how this trade worked and what we were looking for and why we traded this to begin with. But before I jump into this, let's talk a little bit about the overall market environment that we're in right now. So I want you to notice something. Let's put in a 5-minute candle here on the NASDAQ. So you notice that we've gone from kind of this choppy market environment to having a nice, beautiful uptrend on Friday the 25th. And then again today, it looked like we had the continuation of that. And then, sorry, that wasn't today, that was yesterday. And then nice, beautiful uptrend. And now we've gone back to consolidation. You know, consolidation is really healthy. If this thing can kind of consolidate and continue going up, that's a really good sign. But I think today, if you look at the NASDAQ, it's kind of summarizing what kind of a day we had. We had upswings, downswings, upswings, downswings, upswings, downswings, and so forth. Same with the Dow Jones. You know, not to the same magnitude, and the S&P, again, not to the same magnitude, but nonetheless, not a nice consistent pattern that we've had, you know, leading up to a day like today. So a lot of different results in the market. Some people were happy today with the trades. Some people are not too happy with their trades. So let's talk about what we did, what we're spotting, and go from there. If you check our watch list, it was at 9:13 or 9:14 a.m. It was posted. The first stock on there was HUSA, Houston American Energy Corporation. What did we see? Why did we trade it? And essentially, what can you take away from this? So obviously, it's hard to miss. You got a nice pre-market percent gainer here. It was as low as the 120s, went to the highs of 450s between 7 a.m. and 7:30 a.m. Eastern Time. As these typically do, it pulled right back, but then had a second run and then pulled right back and kind of started forming this higher lows. Okay? So, I mean, this is Stock Basics 101, and, you know, trend lines don't mean much in general, but they just help you visualize what's going on with the overall swing of the trade. And in this case, it's an uptrending stock, so we are dealing with a bullish stock. So, there is absolutely a perspective here. If you have a giant dip and a giant increase, you can grab the kind of median of the two, and that's kind of where we had the support and resistance level right here, this kind of median consolidation between the 3s and the 350s. So when the stock finally broke this 340s, 350s area, we found that to be a key entry, especially as volume was starting to come in. We entered at 347, and I mean, a little bit of luck helped us out here. Not because we were lucky in the trade, we were lucky that we got filled right at 347, like literally at the high of this ticker before we went into a halt. You can take a look at our screenshot of our trade today and look at the time and compare that to this candle. Basically, we got filled right at the top right here, and a lot of you asked, you know, what caused the entry. So this is your standard, you know, halt and gap up play, and it's one of those things that it's not the easiest for a beginner to do. It's something that takes a little bit of experience and a bit of comfort to develop into, and some people never even get comfortable with these, and that's okay as well. But you notice the same sort of play on OXBR as well, where you have these stocks that spike, gap, kind of the gap up, they halt, they gap up, halt, gap up, and then they kind of gap up, halt, and then gap up, halt, gap up, and then finally at some point they find a top, and then they reverse and go off into oblivion. So the key lesson to take away here is that on the first, you know, I can't say all the gap ups, but on the first few gap ups, the earlier you are into these gap ups and halts, you know, you got to realize that these halts are due to volatility halts put into place, which means that there is pent up demand, but in order to not create some kind of a crazy spike, these volatility halts get put into place. So recognizing that from OXBR, from our trade earlier on, this was on what do you call it, on the 28th, so yesterday. We recognize the same sort of pattern again today, that we had a nice beautiful gap up. Now nobody would have been able to predict the halt, but the halt didn't make us nervous. So we held obviously through the halt because we're forced to, and as these typically showed in the past, as you can see with OXBR, they typically gap up significantly higher. Like this thing went from the 2s all the way to the 8s with those gap up plays. So we held and we sold for a 440 exit. Now many are wondering why and how do we call the perfect top in here at close to the 450s. Well, if you take a look at the pre-market action, this stock had issues in the 450s not once but twice. So what are the likely odds that this thing came all the way from the 260s to not have issues here again in the 450s? So that's why we put in our sell order at 440, and it looks like we got filled just before this thing went and filled it in the 448s, and then it turned and went and did its thing again and kind of gapped down. It's not really that advanced of an explanation. It's just using previous history to determine where a probable exit would be smart, and we got filled here in the 440s for that. So really nice trade, 1,500 shares, $1,400 in a nice easy 5 minutes. Can't complain about that. If you look at my watch list, one of the other ones I was talking about was CRDF. I called it a higher price play that was holding near its highs in 1236. And if it could break through with convincing volume, then this could be a spiker. And that's this right here. So this thing was holding here in the 1230s on the 28th. Nice kind of afternoon spike. And today, not much pre-market action, but it definitely showed that it can run. So a lot of people ask, how do you prepare for a multi-year 52-week breakout like CRDF? Well, we got to go and look at CRDF's history here. So CRDF has been a multi-day runner from September 17th now. This thing has been talked about. You can go back and look at our recaps. We have talked about this for quite a few days now, and this thing's been running. So why did we call this ready to break out if it can go past 1236? Well, if you look in on the multi-day chart right here, you can see that the stock kind of spiked and topped out. Like if I could draw like an imaginary line, you have a top out action right here in the 1236 area. And as these stocks typically show, if they can consolidate for a few days after a nice beautiful spike, they can have a nice continuation play off of that area. It's really difficult to just start buying stocks that pile up on one another without any sort of consolidation. But if they can hold their gains like this did, then you can have a nice, beautiful play off the 1236s. We totally missed this trade today, by the way. But I mean, what a beautiful spike. You buy here in the 1236s, and you've got all the way up to the 15. So nice, $3, $3 a share, easy for anybody that was paying attention to CRDF. So basically, how you find these? Look for the percent gainer, follow the percent gainers. If they can consolidate a week, 2 weeks, 3 weeks afterwards, then they're setting up potentially the legs to move on again. Okay, so we talked about the halt and gap up play between HUSA and how it's very similar to OXBR. We talked about how to prep for the CRDF multi-year breakout. And yeah, the other one that was running today was ADIL. I mean, what a beautiful run. Look at this thing. It opened up here in the 140s. It had a nice, beautiful little morning spike and went up all the way to the 250s. So nice little move. And then did this standard cup and handle move. And the cup and handle, for anybody who doesn't know, if you look at the shape, this kind of looks like a cup, and you got the handle right here. So this is a very predictable chart action. A lot of traders know about it, so they tend to psychologically buy into it when they see it. And how would you have spotted ADIL? Well, you would have spotted in the morning for sure when this thing spiked. It would have come up on the top percent gainer scan that your platform will have. Depends on what you use, obviously, but all of them usually have the top percent gainer scan. It would show up on here, and then maybe it would have disappeared when it came back down to the 170s, or maybe it wasn't meeting the criteria of the 15%. But where you would have caught it once again is when it made brand new highs here in the 250s. You can see down here We have a new high scanner. Obviously, right now it's aftermarket hours, so there's no new highs being made, but you would have seen ADIL on the new high scanner as it took out the 250's resistance level from the morning. And I mean, what a beautiful purchase here. You get in the 250s, you sell in the 4s. You've got a beautiful, beautiful 85, 90% mover right here. So this will be interesting because, I mean, this is kind of setting up the formation of the A, B, C, and then a D pattern later on in the week, maybe tomorrow, the day after, and so forth. So, yeah, really cool stuff. On top of that, you can kind of tell here, if you look at the multi-day chart as well, you can look and see that we've been having issues in the 3s multiple times, back in December, back here in June, and then today it finally punched through it, and now it failed again. But I mean, this is on watch now, because if this thing can take out $3 a share on the 30th of September, this could have another beautiful leg up. So ADIL be on the watch list for sure for September 30th, and I hope you learned something from that. The other thing that we'll talk about on top of all this stuff is we're going to be running a live video. We're going to announce it shortly here. And basically the idea is to put ourselves out there, let you ask us questions. If there's anything that doesn't make sense, we'll try to kind of get you some clarity on that. Really great session where we can kind of add some valuable content to our wonderful followers who've been so interactive with us and asking questions. And, you know, this is really good for you if you're a beginner, don't really know what this is, but you're interested and want to learn more. Get talking to us. We'll answer anything you got, and hopefully we get the chance to work with you at the end. And if not, that's also okay. All right, so nice to see you guys again. Hopefully you learned something. We'll see you on the next recap. Have a good day.